Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, I'm finally starting to find and starting to read articles where the economists and the experts are now calling for a significant drop in equity, or better said, a crash or correction, whichever doesn't trigger your emotions. But regardless, you guys, do you remember me saying just as soon as we had a confirmed recession that we would see across all media platforms them over elaborating the housing market crash? Now that has finally started today. I finally have that article where they are estimating a 40% negative equity drop. And that's what we're going to dig in today. And a special shout out to one of my subscribers who actually sent me this article. So to Skipper, thank you, sir, for sending me this. I am reporting on it just for you, and I definitely appreciate it. So what we're going to do, guys, is we're going to unload this article. We're going to talk about the projections, and we're also going to talk about how moving forward into 2022, you're going to start seeing a lot more articles just like this that are calling for severe equity drops. Take a look at this. A 20 to 40% housing crash is coming, says investor who called crypto the tulip mania of the 21st century. And that's Peter Grandich. And this article is going to be linked in my description, y'all, as always. So if you want to go back and read this article, and there's also a video, by all means, do it. But essentially, he's going to bring up some solid points. It's a very short article. It has some very fire facts and insights that I think we should all pay attention to. But remember, you guys, I'm not a financial advisor. Even if I want to be. This is my personal YouTube channel where I share with you my experiences and my thoughts as it pertains to real estate. Yes, my profession is in real estate as a realtor, predominantly as a loan officer, and right now as a full-time instructor and educator. So I know a lot about real estate, and I absolutely love it. And I have special insights, special angles, because not only that, I was also a victim of my own bad decisions. Back in 2008, I lost my own house. It led to foreclosure, which took me out of the investor market. I had to spend 10 years dragging myself out of the hole. And that is the warning that I'm trying to issue to so many people. If you buy right now, it's possible that you get trapped upside down in your house. And that's why it is way better, way better to have a higher interest rate versus an overpriced house. That's why I keep saying the higher the interest rates, the better. And we actually need a healthy reset. All right. Well, let's get started on this article right now. Okay, so here's a couple of key points that it starts off with. Peter Grandich, who correctly predicted the crypto and stock market crashes, says that he expects a major correction in the real estate market in the United States. He suggested that the recent sell-offs in crypto and equities would spill over into housing. Grandich said that the goal in this market is to not try to lose a lot of money, and warned that real estate could see a 20, 30, a 40% loss pretty fast. Now, this is especially important, y'all, because like I've been warning you guys, this is just good that another investor is saying this. This is going to happen quickly. I think it propped up quickly. It's going to fall quickly. But also what I've noticed is, do you guys see the massive lack of definition for a housing market crash? I wish someone would just define a crash so that we can at least all be on the same page. So this man is saying a major correction and talking about a 40% deduction in equity. To me, that's a massive crash. So some other people, it may not be a crash, but the main thing here is negative equity growth. So this very intelligent person who's been calling all of the right calls, crypto, stock market, is now saying all of that's going to spill over into the housing market, and possibly the housing market will be an even worse market than the stock market as far as depreciation. Him calling a 40% drop is mega, because remember, in 2009 during that collapse, the national average, okay, just the national average, some metro areas hard hit, others not. But the national average in 2009 was a drop of 19%. So to call a 40% nationwide average is mega crazy, right? And it's very, very possible. I'm not calling 40% national average. I'll say 40% in some overvalued metro areas, but I'm trying to be a little bit more conservative with my crash predictions. And that's why I'm not calling 40% on a nationwide scale. And I hope you guys understand that. Let's get back to this article right now. Okay, so first he's going to go into crypto and equities. Stocks and cryptocurrencies continue to perform weakly, with the S&P 500 down 18% year to date and Bitcoin down 53% year to date. Ouch. Last year, Grandich issued a warning saying that he didn't want to own any general equities or bonds. He also called cryptocurrencies the tulip mania of the 21st century, a reference to a 7th century Dutch asset bubble, which drove the price of tulips to $750,000 per bulb. Wow. In response to his predictions, Grandich claimed to have received hate mail, just like in my comment section. What's with all these passionate people, right? On the other side of the coin, like, get your emotions together, people. But this guy actually got death threats for these predictions. This is wild. It goes on. In fact, I got legitimate death threats by mail and phone, he said. We haven't gone 180 yet in cryptocurrencies, but I think the worst is over there, and there has to be more of a shakeout. There will be survivors, but unfortunately, most of the people that saw 2/3 of the market go to money heaven, they're not going to be able to play ever again. While he is skeptical of cryptocurrencies, Grandich said that the blockchain technology itself is legit, and he predicts that it will trade in similar patterns as technology stocks. So he was obviously right about the stock market. He was obviously right about crypto. So it's fair to say he's more than likely right about the housing market, although I don't know about 40%. But again, let's talk about the people on the other side of the coin that think that real estate is just going to go up and that right now is the time to buy. Do y'all notice how passionate and ugly and hateful they get? I actually went on an investor website on Facebook this morning, and the comments that I was reading were out of this world. Someone had posted an article basically warning about a potential negative equity growth happening around the nation. And so many of these investors were laughing at it, acting like it's not even possible. Now, granted, they're not institutional investors, they're small investors, but the egos and the emotions on these people is overwhelming. They can, in their minds, they cannot possibly be wrong, right? So what's with that? Why are people so emotional on the flip side of the coin? Why? I don't understand that. Y'all should be thanking us for warning you, giving you at least another perspective to consider, right? Maybe I'm wrong. It is what it is. Let's get back to this article right now. Okay, we're going to finish out this article, and I absolutely love the last paragraph, but take a look at this. This is absolute fire from this guy. So here it goes. As a recession approaches and intensifies, Grandich forecasts a severe fall in housing prices. The negative wealth effect will become the overriding factor that keeps markets on the defensive, he said. We're seeing the end of the big bubble in real estate. I think it's the one market we're going to see the most down this quarter versus other markets. That's a huge statement. That's a huge statement, y'all, because the stock market is gutted. So we'll have to catch up to that, right? That's a huge statement from this man. Let's continue. He suggested that current real estate prices are not based on fundamentals, according to the old Economics 101 books and us old relics that read them. I love this guy. I love this guy. The only thing I've learned in almost 40 years is we tend as human beings in everything to go extreme one side or another, he explained. We've reached a peak on one end. We're not going to go back to the middle. We're going to have to swing to the other side. Those are the points normally that have been reached. So a very simple yet very powerful last paragraph from this man. I suggest everyone at least considers what he's saying. Although I don't believe personally, I think it's possible, right? I think it's possible, and I'll welcome it because I'm trying to buy a house right now. But I don't think a national average of a 40% negative equity growth is realistic. I don't think that's going to happen on the nationwide scale, although I certainly think that some metro areas can get that high as far as negative equity growth. But I'm going to conclude on this, you guys. So remember what I'm saying. As soon as the recession is confirmed, we're going to start seeing more and more articles just like this explode throughout mainstream media. What that's going to do in turn is it's going to shift that extreme fear of missing out over to the sellers. And that's when we're really going to see that negative equity growth. We're going to see lower medium sales prices. We're going to see lower sold prices on houses. And it's really going to get out of control. But again, that recession, in my opinion, needs to be confirmed. It should be confirmed this month, depending on if they change the definition. And we really don't know if there's negative GDP. I'm confident there's negative GDP, but it's not confirmed yet. So we'll have to wait on that. But regardless, you guys, I wanted to give you this video. This is someone else saying essentially what I'm saying, someone that's way smarter than me, that has way more experience than me, sounding the alarm. So if you're watching this video, remember how I want to end this, which is always empowerment, education, and preparation. Double down at your preparation if you're trying to buy. Make sure you have excellent credit, no consumer debt. Change your spending habits so that you can save more money. Get another source of income, and definitely watch the trends in your local market, because I hope to join you on the other end of the finish line. Now, if you're out there investing in real estate, I do wish you luck, and I hope you win.